Hi, I'm Robin, and today I'm going to be talking about how to finance semi-commercial property. A semi-commercial or mixed-use property is a blend of commercial and residential, so typically we would see retail on the ground floor and then flats above. I think to choose over a full commercial investment is you have a blend of tenants, so you'll have a mix of commercial and residential, and then in terms of why you would do it at all, I think the yields you're seeing at the moment on commercial and semi-commercial is a lot higher than you would get on a standard buy-to-let. When assessing semi-commercial properties, they will look at the income the building generates, so that will be a blend of the commercial income and also the residential income, and if we're going to use the commercial income, we do need to have a lease in place. Deposit for semi-commercial is the same as buy-to-let, so a minimum of 25%. It is notoriously difficult to fund if you're a first-time investor, typically because lenders prefer some form of experience as a landlord. There are lenders that do it, but you will probably pay a bit of a premium on the rates. The biggest challenge I'm seeing at the moment is with valuations, so particularly since COVID we're seeing a lot of the commercial side is being downvalued. And then also it's a question of how much demand there is for the commercial unit as well. So if there's a lot of empty property around nearby, that will be reflected in the valuer's comments, and it can impact on the loan to value. We will typically use the residential income if it is empty, as long as it's in a lettable condition. But if we are going to use the commercial income, we do need to have a lease in place, normally with at least 2 years remaining on it. In terms of commercial type and tenancy type, I would say look for a sector which is sustainable. So retail is normally strong as long as it's in a good sector. Offices are a little bit more challenging as we're in more of a sort of working from home environment and hybrid working. If it's leisure, so pubs, they are very difficult to fund at the moment just due to pressures on hospitality as a whole. We can value commercial either on a blend of the investment values, so they'll work out a multiplier based on the lease, or it could be on vacant possession, and that's down to the valuer's comments. We can use the commercial income as long as there is a lease in place, but if it is empty, we cannot use any sort of speculative income, and as long as the residential part is in a lettable condition, you can still use that income. I would say the con at the moment is, as I say, the valuations are a little bit challenging, and then the cost of borrowing is also a little bit higher. But the biggest pro is you'll get a much higher return on your investment, so the yields are normally higher. And then also, if you do have a strong commercial tenant, it can be there for 5 years with a fully repairing and insuring lease, so you're going to get a good return on your investment for the future. We're a whole of market brokerage. We've got access to all of the lenders. We'll typically make an assessment on your application, speak to lenders, BDMs and valuers beforehand, just to make sure you're in the strongest position possible going forwards and that your application will be in a good position to be accepted. Thank you so much for listening to that. If you do have any questions, please get in touch on the contact details below.